Hi, Piyush. How are you?
Good, Julian. How are you?
I'm good, thank you. Good to see you today, Tuesday, August 5th, 2025. We're going to do some market updates for the residential real estate of Greater Vancouver in terms of supply, demand, price evolution, and you will handle the part where it comes down to mortgage rate, actual trends, and what could be expected. Okay, very good. Ready to go?
Yep.
Okay, let's go. All right. Here we are in Vancouver. Fantastic city. Okay, let's start with the inventory. Ta-da! Where it still goes up. More and more people want to sell. So we're looking at the total inventory evolution for the Greater Vancouver area on a rolling 12-month. We are at, very, very high levels, similar levels than 2015. So that means more options for buyers out there that are going for it. What we see is that a lot of buyers are missing the confidence in the economy in the future to actually make move. But there's still a market out there, as we will verify on this chart, where we're still on the lower part of the chart. Okay. At the same time, we did better than last month. There is an uptick in the market. We're still below the 10-year average. All right. We're still below the 10-year average over here. So 13.9%, okay, below the 10-year seasonal average. So still not as good as what it could be. But I guess, sometimes you're above average, sometimes you're below average. But right now we're below. And the fun fact is that how does that impact the price? Well, not as much. Not as much. We're grinding sideways, right? We basically go back to the same comments that I did last month. We do have a soaring inventory. We don't have as much sales. Those units are not being absorbed. At the same time, we're not so far off the all-time high, right? So should we expect a drop in the market? I wouldn't say so. Right? So the fact that there is more inventory within properties, particularly when it comes down to strata and even detached for that matter, right? Like in terms of, so many parameters, criteria comes into effect when it comes down to choose a property. And because there is more inventory, there is more choices for buyers to choose from, right? So right now, what you could basically understand is that you can access better quality for the same price, right?
Exactly.
Yeah. So that's what I see in my market with the people I work with when it comes to seller or buyers. So for the months to come, I would say to the extent that you have a need when it comes to sell, when it comes to buy, follow the need that you have, right?
Yeah.
Timing the market is always very challenging. We don't know what tomorrow brings. So yeah, Mr. Piyush, what do you have for us in terms of mortgage rate update?
Okay. So July 30th, Bank of Canada had its meeting, and there was no change. So he left the overnight rate the same, and the prime rate still remains at 4.9%. So 4.95% for most institutions. Um, there has been a change in the fixed rates, which I always say is driven by the 5-year bond yield. That
You
has,
want to share screen?
yes, so that has gone in the other direction. That
Okay. So interestingly enough, I have a question for you. When it comes to the prime rate,
yeah,
like the prime rate seems like never changes. When was the last time there's been a move in the prime rate? Because the variable rate, Bank of Canada has a say. Fixed
yeah.
rate, well, as you're gonna show us, it depends on the Canada 5-year bond rate. But the prime rate stays there.
Yeah, so that has been the case for the last few Bank of Canada meetings. There was changes in the prime rate in the beginning of the year. I believe we saw 2 or 3 consecutive rate drops, but then ever since the whole trade war with the United States came into play, we've been doing the wait and see approach. Um, Everybody thought, that would be a temporary thing. The United States would feel the effects of putting additional tariffs on Canada, but they are holding steady. And if anything, as we've seen in the recent days, they've turned up the heat a bit more. Now, in particularly to British Columbia, they're going to be putting tariffs on lumber, right? So that, which is very important to us. And then they've already done tariffs out east, affecting the economies out east on steel and I believe aluminum products. So yeah. So for that reason, the Bank of Canada is holding steady. And just remember, Bank of Canada is driven by inflation. So if inflation, because we were potentially in a place where we were last year, we were experiencing stagflation, right? The
Mhm.
economy was stagnating and inflation was going up. So the Bank of Canada, to combat inflation, raised the prime rate, and that's where everybody who had a variable rate, their rates went up. Thankfully, at this point right now, when I checked earlier in the morning, inflation was sitting at 1.9, and the Bank of Canada aims to keep inflation between 2 to 3%.
Mm-hmm. 1.9,
So
very good.
yeah, so that's the reason why
For
we
year
are
over year, years,
year over year. I don't know,
the
but
1.9 was months of a month.
sorry,
The 1.9
1.9 is
inflation
for June.
is for June. So from
Correct.
June to July.
Yes,
Okay. And the year over year?
year over year, I don't have.
Okay.
Yeah,
Okay.
because that's something I checked quickly.
Very good. Okay.
Um,
And also part of the conversation that we had off camera was your approach in terms of the potential evolution of the political landscape down south because of the midterms coming up next year. Can you expand on that a bit?
yeah. Before I go into that, I'm going to finish off the 5-year bond portion. So
Oh,
as you can
yes.
see, so this is a live read on the 5-year bond right now. So it's 2.944. In the last week, the bond yields have actually jumped above 3%. So because of that, so we can see that it's sitting
Yeah.
at 3.137 here on July 14th. So it's
Mm-hmm.
steadily coming back down. So, still above. So July 25th, still above 3%, still above. So now, as of today, the bond yields have dropped below 3%. But because of that rate of that increase over here, fixed rates have gone up. So we saw 2 consecutive weeks of rate hikes for the fixed rate portion, 5 points each week for the 3-year fixed, insured and conventional. So conventional is 20% or more, insured is 20% or less down payment. And if you were looking for a 5-year fixed rate, those rates went up by 10 points each week. So that's where, the old things that we always say, don't wait for the rates to come down, because guess what, the rates over here just went up, right?
Yeah, that's very much counterintuitive from what we hear on the
Yeah.
streets, right? Like everybody's like, yeah, rates are coming down. Like, Trump's is hammering Powell for him to cut the rates, and everybody's expecting that Canada, Central Bank of Canada, will do the same. And next thing you know, rates go up.
Yeah, and then the 5-year Canada bond yield is dependent on the 10-year US bond yield. And from what we've seen, it seems like the US is going to hold steady. We're not going to see the Fed dropping the rates anytime soon, no matter how many times Trump threatens to fire Powell, and he can't legally fire him. But the Bank of Canada does have room for rate drops. That's where, a variable rate we could potentially see drop towards the end of the year. But, there are many factors that are involved in this, because the trade war is a big factor here. We have potential for a change next year. So in November 2026, the United States will have its midterm elections. There are some movements happening right now, as we can see in the news the last few days. In Texas, the Republicans are trying to redistrict some of democratically held districts, so that way they would become Republican districts. The term that is used down there is called gerrymandering, and there is a significant pushback against them. So if what we're seeing right now, the beginnings of it, could be a big movement for the Democrats. So if the Democrats could potentially come back during the midterm elections, then there would be pushback against Trump's agenda, and that may slow down the whole tariff war that he's on with the rest of the world. But there's so much more time till that, because that's not going to happen till November of 2026, and we're in August of 2025. So this situation, I think this will remain steady for the time being, as far as we know. So if you are a person who is rate sensitive, and you keep thinking about, should I go fixed or should I go variable? With the fixed term, remember, if you were to take a 3-year fixed term, most banks will come and let you renegotiate a renewal 6 months before the term is over. So technically, you're only in there for 2.5 years. So in 2.5 years, you can go back and you can renegotiate.
But with the same lender, though, if you want to switch lender,
then you pay a penalty.
To the term.
Yeah. So you can break the term still, then they will charge you a interest penalty.
Okay.
It's dependent on how many months are left, and then there's a calculation. It's usually the higher of. It's either a 3-month interest penalty or the interest rate differential.
Okay.
The interest rate differential is the posted rate minus your contract rate times the amount of months that are left. So whichever is higher, if that interest rate calculation is higher, or the 3 months interest penalty. So then you can potentially, after you pay that off, you jump over to a new lender. New lenders will cover up to $3,000 of that penalty.
Okay.
And then that's the maximum, and then you can potentially negotiate a new rate with your new lender. If you are but then that's the thing. If you were to stay with your current lender, then you can 2.5 years from now, we can potentially be in a different landscape where the interest rate could be lower. And if you are a person who has a long-term plan for your current property, then you can potentially lock into a 5-year fixed term at that time, 2.5 years from now. If you have a short-term plan and where you're not too sure if 3 to 5 years from now, if the home that you love now, or if you're still going to be in love with it, or you need something bigger because your family is growing. So then
Hmm.
that's where you could potentially you look into a variable rate. So with a variable rate, the interest penalty is always 3 months interest. That's the most you'll ever pay for breaking that term. And you also have that ability to ride the wave of rate drops and potential rate hikes. Because remember, the variable rate is determined by the Bank of Canada meetings. So, as we said, there's no change. So prime rate remains at 4.95. Your rate has not changed. But if potentially towards the end of the year, they do a rate drop of, let's say, another, they say, okay, we're going to drop the rate by 25 bips, right? So that 25 bips, so now your prime rate becomes 4.7. And let's say if you have your current rate is prime minus 0.7, then your interest rate will become 4%. Conversely, if it goes up, if inflation has gone up, things have not improved, and Bank of Canada needs to tackle the inflation factor of things, then they might increase it. Then this is where uh, you always have to look into when you're getting into a variable mortgage. Ask this question: is your payment a uh, static payment, or is it a adjustable payment?
Hmm.
When you have a static payment, your monthly payments remains the same. The interest that I'm going to stop sharing my screen here. Um, the monthly payment that you make remains the same. The only difference is how much is going towards interest and how much is going towards principal. That changes. But the adjustable rate payment, your monthly payment goes up and down with the rate announcement. So if the rate announcement says the rates have now dropped, your payment drops.
Okay.
Your monthly payment drops. If it goes up, then it goes up. So you have to figure out what works for you, and make the decision, based on your budget. So always keep a budget in mind as well. Yeah.
Interesting. Interesting. So
Yeah.
your advice is to
Date the rate, marry the house.
and because there is more inventory, it's easier to fall in love.
It is, and in the past few years, people bought the home that they could afford. Right? You as a buyer, you didn't have the luxury to be picky. Now you do, as you pointed out with your stats. There's so much inventory in the market now.
Yeah.
Clients have the ability to shop around, and
Mhm.
what I would, and clients tend to shop around the wrong thing. They are focused too much on the interest rate. It is your primary residence. The interest rate, no matter what you pay, is not it's not a tax deductible expense. You're not gonna get that money back.
Mhm.
If you are an investor, then conversely, that interest is now tax deductible, so it goes against your gross income. So it's a business expense for you regardless.
Yeah, well,
Or
let's touch base quickly on that, with the investors because they obviously MIA, missing in
yeah,
action in this market, right? And that let's address that because I have that question on a regular basis, like what happened to the market? Why we stopped going up? Why did we stop the frenzy? Well, um, the main reason, in my opinion, it's like most cases, it's a combination of reasons, but there is a few main ones, I would say. And in this particular case, there's been a very big shift in terms of policy from the federal government when it comes to welcoming new immigrants. They ultimately closed the tap on allowing new immigrants and having them becoming a permanent resident, which allow them to purchase real estate because there is a foreign buyer ban. Okay, so that has an impact on the rental market, which has been declining for numbers of months, about 8 right now, which is very odd in my opinion, because I've been studying real estate for 20 plus years, residential throughout the world, and it's the first time I see something like this. Okay, so in BC, our market, the laws are very pro tenant. Okay, so for instance, us as realtors, when we have a property for sale or we want to buy a property that is tenanted, we're really walking on eggs. When it comes to conduct the showings, when it comes to addressing the notice to vacate, it's quite you're going through hoops of fires. Okay, you have to be very sensitive about the dates that you put in there, the delays to access the property, the rights that the tenants have over the property. And to some extent, that purchase has to be for principal residence. Otherwise, you keep the tenant, and if you do something unlawful, then it's going to be translating in 12 months of penalty of the rent. So significant money. So now investors, mom and pop, wanted to have like a money producing type of real estate purchase, rental income. And in that case, basically, they could deduct the interest rate associated to the purchase. So they should not be too worried about the interest rate. But those people are off the picture, and we see it in different markets, particularly Toronto and Vancouver in the pre-sale.
Yeah.
Okay, so I explained people for the residential market, we have 3 markets: pre-sale, resale, and rental. Okay, so right now the pre-sale is not doing good. Like if you look in Toronto, we are, in a very tricky situation. Vancouver as well. So they are like conglomerates of developers coming together and lobbying for the foreign buyer ban to be lifted. Okay, so it will generate more volume, and it will basically take those units off the shelf and generate
save the pre-sale market.
To save the pre-sale market. And all that to say that because of the actual economical landscape and pro tenants and new policies around immigration, those mom and pop investors that had a income producing property that they would want to sell, they're coming to our stories at times. Like I hear a few, and it's quite concerning sometimes. And they're off and they are not here anymore, right? And they were part of those buyers, and right now that might explain also why we have less volumes when it comes to buying. I'm very curious to see where the rent decrease is going to stop. Very curious.
Yeah, I mean, you said it right there. With the investors staying out of the market, we might reach an equilibrium where there won't be as many rental units available, but there's still people who are out there looking to rent. What I've seen, and you probably see as well, a lot of these developers, what they're doing is, because the pre-sale market is so bad, they're converting those pre-sale markets, if they can right now, if they're in an early enough stage, they're switching it to rental properties. They're rather than it be for to sale, they'd be market rents, just to save their projects. So we might see actually more availability of rental units from these big developers versus the mom and pop buyers out there, or mom and pop investors in at least in the condo market. So there's going to be some sort of stability. I can't see it falling too far down, because now if these people who are getting brand new condos that would have been condos as now are fully full-fledged rental properties, there's the quality there, right? Versus
Well,
you going,
Piyush, what you're saying is that we're still gonna witness some rental prices getting lower and lower, because if you basically flood the market with new units as good quality rentals at a competitive price, well, those other mom and pop type of
yes,
properties are at stake, right? They're gonna have to lower their rent.
exactly. Because like, would you not pay 1,500-1,600 bucks for a one-bedroom condo that's, it's higher up, rather than you being in a dark basement or
Mhm.
in somebody's laneway home, right? So now, the tenants, the rental markets, they will have options as well. So there's going to be an equilibrium at a certain point. Because like right now, like, do how much is a one bedroom, rental apartment in Vancouver? Like,
24
if you're in, huh?
2400.
I was gonna say, yeah. So that's probably it. Like, if you're, let's say, if you're down in English Bay with a view of the water, right? One bedroom, it's up there. It's still not cheap, even though the rents have come down. So there is some, and those apartments on English Bay, they're old, right? So there's going to be good shift in the market, and it's good for everybody.
Okay, well, if you say so. Do you have any rental property, Piyush? Apparently not.
No. Like you said, it's heavily favored in front of tenants. Because I have a client right now. He's having problem with the tenant, and you
Yeah,
can't just go change the lock on them. You can't just kick them out, right? So it's not
I'm
easy.
gonna give some case study to the audience, and maybe we can finish on that. Where I was acting for the buyer, and ultimately the buyer wanted to purchase that piece of property to make it his principal residence. And next thing you know, seller's agent is calling me. So basically, contracts gets firm. So once it's firm, that's when you, as a buyer, you request the seller to provide the notice to the tenant. Okay, and everything has to do within a certain very sensitive time frame. Okay, and everything is gonna be respected. So respect everything. Next thing you know, seller's agent is calling me and say, hey, the tenant has set a complaint at the residential tenancy branch because she doesn't believe that your buyer will make it his principal residence. I think she thinks that you want to basically give her notice and put a new tenant and at a higher price. I say, oh, wow. So what now? So we got lucky that the hearing at the RTB was prior to completion. Okay, so that it could be sorted out. So there you go. Myself, my buyer, the seller's agent, we had to build the case and prove what we were saying. Like, okay. And it went quick because my buyer at the time arranged with his landlord, where he was renting a similar type of property, not too far off, for the price that she was paying. And he arranged with the landlord to have her take over his rent. So when we showed up at the hearing, we said, okay, no, it's actually for principal residence. And to the extent that this lady wants to move into the rental, it was a quite good rental, actually. And then the landlord has agreed, right? No change in the rent price. And then she also complained that she didn't receive the notice in time, but the seller and seller's agent, they had the proof, right? So after a few hours within the hearing of the RTB, we had awarded the right to actually take possession of the property, and she was asked to vacate the property. But all that to say that that tenant had nothing to lose. It was obviously a lie, like when it comes to not receiving the notice on time, because the seller's agent had the proof. Making up stories that My buyer will not use it as a principal residence. And where we got lucky is because we had the hearing before completion. Because what can happen is that, to the extent that there are like few cases back to back, and when she actually makes the complaint, then the hearing is being pushed back till after completion. And then what? Right? Like, okay, everything is blocked. Is the seller still on to sell? Is the buyer on to buy? Like, does anybody wants to get out of the contract, and so on. So those cases are out there. It's real life. So selling or buying a rental property is ultimately becoming a stigmatized property. Okay, it's quite complicated out there. So and that's maybe why in the inventory, as part of a better quality product, you have vacant or owner-occupied property, so you have more certainty in terms of where you are stepping into. Okay,
Exactly.
So yeah, I have another story. At the time I was representing seller for tenanted property. I will not tell that story.
I'm sure
right
there are many horror stories.
Oh yeah. So very good. Okay. Well, thank you so much, Pius. Well, marry the home, date the rate.
There you go.
I think it's the moral of the story today. All right.
Great.
So I'll see you next month. Thank you for your time. Thank you for your insight and your expertise.
Thank
See
you,
you
John.
next month. Enjoy August. Should be fun. BC has everything to offer for spending a fantastic summer. So make the best of it.
Exactly. Get out
Happy BC Day. Thank you. Bye-bye.
there. Bye.